Good evening, guys. Hope you had a great day today, or if it's starting by looking at Bartho's late afternoon shadow in the sun there. Still got some time left in the day, which is good too. So getting straight into it, guys. Had a couple message that actually hadn't done the strategy the challenge, and I did a video which I posted, just a pretty much a quick rundown in the Telegram group, which I just uploaded to YouTube as well. So just to kind of give you guys an idea of how we trade the orb strategy. Like I said, there's many different ways that you can trade the orb strategy. I just go based off data collection that I've been doing for the last how many months, and I just sticking with something that's been consistent over a long period of time, right? So you'll see many different traders traded many different ways. The end result from the orb strategy is really identifying the open range, which is the 50-minute candle on, if you're trading Sydney, it'll be 8 a.m. So 8:15 would be when you're looking to get into the market, or if you're trading the New York stock, which is going to be 11:30 open, so you're not really looking to trades till 11:45. Okay, so that's the main criteria for an open range, or what has been consistent. I know some of you guys have been testing on London. I've done a lot of testing on London, yet to find good consistency trading London. And for everywhere that I've searched and found as well, London just doesn't seem to be that consistent unless you start diving into more detailed technical analysis, which kind of defeats the purpose of what the orb is, right? You then start adding in break and retest and closes and, many different scenarios to how to trade it. Now, the basics of the orb, if you didn't get a chance to watch it prior to being on this call today, then I'm just going to do a quick run through of, I'm just going to move that, quick run through of what we look for in the actual range itself. And I opened up, so the indicator I'm kind of building out with a guy, he's kind of been on and off, so it's yet to be finished. He's still working on it, but he's got the bare basics there ready as we go. So I'll just so it's obviously it won't nothing's really going to show. Yeah, well, it's going to kind of build out 15 minutes here. So it's a 15-minute range here. That's on a 1 minute time frame. And using this, the 1 minute's more so for entries. But to give you a quick rundown on the orb itself, obviously our opening range is our candle now, so 11:30, and we're essentially drawing a box, depending on how high the opening range itself opens up or continues down. Whatever it is during the 15-minute time frame, we're adding a high and a low of that range. And then obviously the key things that I'm looking for is as a minimum, where is price most likely to reject, which is currently here. Where is another area of support, and where is, if we break out, where are we likely to touch prior to that, right? So we know that currently we've been in this overall bearish downtrend, but why were we in this downtrend? Well, I believe we're hunting that liquidity, right? So huge imbalance here, regardless where we pushed up to. We talked about last night, and those over the last, the last challenge knew that this was an area of where price was likely to retrace back to. Now we're pushing out of that area. On the 1 hour time frame, we've already created new imbalance, right? So we've got imbalance here, and pending where this candle closes, we'll have imbalance in this middle part, this middle area here. So all we're simply looking for is, if you're looking to place a trade on the 15, let's go back to that, sorry. If you're looking to place a trade using the 15-minute orb, which is currently here on this candle, right? So if we're looking to place a trade here, we're usually aiming for at least, or ideally, a 1-to-1, right? 1-to-1 is going to be dependent on if we're breaking out of a resistance area or if we're coming up to a previous structure, right? So there's chances where price is going to be lower than a one-to-one, and we're just moving with volume out of that opening range and price. We're targeting, uh, just under a one-to-one, or even if we're targeting 50% of the move, that's going to be, dependent on previous structures, right? So for me, I find that it's not always a one-to-one. Sometimes you'll get lucky and you'll be able to trail stop it and hold price and you'll continue to push up from here. But not always are you going to have the ability to get a one-to-one. Like I always say, is if you're not comfortable trading anything less than a one-to-one, only look or only take trades that are at least a one-to-one risk reward. Again, the point of a risk reward tool is obviously good for risk management, but also comes down to your win rate, right? I've over the years met many traders that don't use a risk reward and take, so many trades. And I've seen them go from $10,000 accounts to $100,000 accounts. Not being over risky in the sense of huge lot sizes to get that to that point, but more so that they take the trade and they lock in profits where they can rather than always be perfect around what risk reward should be. So, kind of adapting the same theory with this strategy is we're looking at targeting certain areas. And for me, I found I had the best success with the orb strategy was if I'm taking a breakout, which is what it is, an open range breakout strategy, I'm targeting, looking at those previous structures, right? Again, stop loss below the range itself. Now, there are traders that go, well, I'm going to have stop loss in the middle of the range. I'm going to have a stop loss depending on the leading candle that breaks out from there. Guys, at the end of the day, it really comes down to your data, right? How often you have your stop loss hit, how often price pushes out of the range, comes back into the range, and then continues in the same direction that you're in anyway, right? So I find that with trading gold, especially US30, not much difference is price needs to have breathing room. Okay. It's not that you're wrong in your analysis on price breaking out and getting to that point. Even if it comes back down here, it doesn't mean that you're wrong in your analysis if you're bullish or overall bullish. It's just there wasn't enough breathing room in where your stop loss was in order for you to place the trade. Okay. So talking about the flip, right? So again, I kind of mentioned this in the video. The flip is more so on directional, right? So usually we're trading with the trend will be, we're trading with the trend and the market's heading down. And then we have have a pause here and that's our opening range. And like last night going against the trend, right? Probably should we have taken the trade? Should not have. Again, arguable on perfection on which way we dipped um, into that fair value gap and prices, recovered out from there now, but then decided it needed to go further down again. So trading against the trend, it's always going to be, is this the bottom? Is this where price is starting to reverse? But for me last night, and I didn't kind of explain the flip because we were already off the call. But we took the trade out to the breakout last night, and then the market ended up flipping, and I was still awake. We closed out on US30 as it peaked out. But then the flip happens at the break after your stop losses hit, right? So it's not exiting and it doesn't break that previous structure. So price needs to, like, we're here and price pushes up and you've got a stop loss here, it needs to break that structure, right? And then that's where you're adding in those additional orders in order to trade it with the direction, right? Highest probability with the orb is always going to be with the direction of the trend. If there's no trend, we're essentially ranging, right? Because we can only be in three directions. We're either bullish and we're heading up, we're ranging, or going sideways, or we're bearish and we're heading down, right? There's only three ways that the market can move. So the flip for me, I'm only taking those doubled trades in the sense of the market is in that direction, right? We're still continuing down or we're still continuing up, right? And risk percentage is still very important, guys. So if you're risking 1% per trade, the flip double entry is should only be 2%, right? So the total for the day, win or lose, should be a maximum of 3%. Is it higher risk? 100%. You're going into the trade again. You're going into the market again. Is it anything wrong with that? Again, it depends on your risk appetite, right? So we take 1 to 2 trades a day. We trade Sydney in the morning. We trade US at night. Awesome. If I took a trade on Sydney and I did a flip on Sydney, I'm not going to then trade at US and I. You just don't want to keep feeding into the market. Win or lose, it doesn't matter. We're trading statistics over a long period of time. Okay, so flip is only on direction, right? Only on trend itself. Um, yeah, that's pretty much it, guys. So I'm just going to close this, give us more space. And yeah, um, so yeah, so we can see on gold, right? We really came into that imbalance here. And we pushed out from this previous low here, sorry, previous lower high here. And we've just got that next point where it's currently struggling right now. And our next point's going to be in here. 1 hour. It's from very much of the muchness. So either way, so if we're taking a trade to the upside from here, I know that we've got our range down the bottom, right? So it's below the actual wick of where that range is. And unless we push up here and close up here, I wouldn't be looking to take a trade to the upside of this because that is, you know, 43, 45. So it's less than 20 pips. We don't take that when we're approaching a previous structure. If you're going to take this, it's looking that we need to close over this structure before continuing up. However, if we close bullish to the upside, we've got all this imbalance down here. Okay, that's something to consider. So for me, we trade it as we see it. And for me, if it closes lower here, unless it gets up over this area, then I'm probably not going to take this trade, right? So it's got to push up. If it closes over, okay, we have consideration, at least on the 5 minute time frame, consideration to continue that out. But I don't want to get into a breakout of this range here, push up to here, come back down, and then price starts to move again. Cool. If we get over 45, have a look at it then, right? If it breaks to the downside or the first candle starts approaching the downside, I'll happily take that short down because I know we've got all that imbalance to the downside. But let's see where we go on US30. It's very much bullish from the current 4 hour candle. Same scenario though, holding at a 45, that same resistance where it's currently being rejected and we're pushing up, pushing up. Unless there's a decent amount of room between here and here and when it closes, not interested in taking it. It is, you can see it's still in this overall range at the moment. But we will see. 5. Yeah. So this box itself will kind of form. I know that we're in the 1 minute here, but it kind of gives you an idea of what it's looking at on this 15. Okay, well, this is good. On here, 45 pushing up. That's good. We're testing that previous structure now. Are we going to get the breakout? 40 to 47, 48. We're at 80 pips now. It's going to be a it's going to be a 48, 40, that's 85. Yeah, it's okay. It's still got momentum. See how it closes in now. All right, so that's our opening range here. We're above 45, so we may still get that momentum up and Let's see. Let's see. US30 looking like it's going to push out, and that's going 45. Yeah, we'll see what happens. So here on based on this range here, 45. Yeah, I need to 45,036. As long as we get over that, what is that resistance? Creeping up. Yeah, I would prefer to take the short down from here. So if this candle comes back down, and like I said, it's because of all that imbalance here. The break on the US30 to the upside is pretty clean here. I believe we'll get into this imbalance that it's got here. Um, Partials is going to be mid of that. So if we head down on here, I'll look for a short at a break of 3.3, just below that. US30. Well, looks like it's so we've got a top wick on US30. We might have to chart like rejecting off 45. So let's see. Who's going to break that low off first? Okay, so we've got a 45,000 rejection. See how we close here. See how we push down here if we're actually going to break this low. It's trying. It's getting there. So is gold. So gold's looking like it's gonna drop here too. Which one are we gonna take? One, both. Who knows? Gold. Gold for the sell. Is it there? Is it coming? Let's see. Okay, US30 is getting close to. US30 going. Gold going. US30 going. Okay, so we had the, where is gold? Okay. So US30 break. Not sure if anyone was in on that, and gold.
Yeah, I took that. US30.
US30, yeah. Gold was good.
Gold is near, but
Yeah, getting close.
yeah. But you do that manually, or do you use a lot of buy stops or sell stops? Because I,
No, only
uh,
manually because I'm right in front of it. So
yeah, oh, because I'm always still too late if I'm right in front of it.
yeah, okay.
So it's easier to use buy or sell stops, but yeah, then you're automatically in, so you cannot adjust it anymore.
Yeah, yeah.
And do you put in just the order, or do you also put in the take profit and the stop loss? And
The
most of the
ones,
times you have time for the other two, but
yeah, not usually with market order. It's yeah, usually what do you call it? Manually after.
yeah, can imagine.
Thought we were going to get that break on gold. We didn't. It's like again, just looking at those round numbers, really key. Didn't get picked up here yet, so may still, depending on what happens on US30 here, but US30. Okay, what is that? So US30 now. Okay, so partials now, if you're on US30, if you're collecting half, or it's pretty volatile, it may just go straight into TP, which 44851. Yeah, so partials here, 44851. Roughly dip. Okay, so close, close. Also, guys, you don't have to trade both. I'm just always looking at both because, there's always going to be an option to trade both. So depending on what's happening in the market. So we didn't, like I said, we didn't really have any news until tomorrow, Thursday, and then obviously Friday as well. So okay, that looks like coming close now. All right, so that closed out on mine. Yeah, I'm out on. Yeah, so US30 is out and done for today.
Yes, me too. Nice.
Both of you made money on that, and I guess we're just waiting to see what happens with gold. If anyone's trading gold or waiting for that breakout if you didn't get in on US30. So let's see. Like I said, I'll move this now because we're already out of that trade. Um, Huge indecision at the moment on where it's currently standing. I would say more so based on where price is holding right now. So yeah, 4 hours still quite bullish. Would have expected more retracement, but still, I mean, when the next 3 minutes, if it doesn't, just keep this in mind. Even if we continue bullish, keep that in mind, right? Huge imbalance there. Huge imbalance that in this area too, right? Okay, so we have when you notice if you look at the look back to any imbalance that's happened prior or previously, um, yeah, look at how it filled, right? It's filled here, price drop down, it's deep, recovery. These are, even based off basic technical analysis on retracements for continuation, imbalances, fair value gaps, whatever you guys want to call it. Wherever you've heard it, it's there um, as a area of missed orders. So but yeah, anytime I see this price going up, cool. This is going to be regardless, even if it comes up, touches 50, touches 57, we've now got this area to consider. And that is our, so here we're looking to the upside on this. My only concern here is that 50, 33.50, right? 33.50 rejection point. See, we held here. It might give us, a significant move to push straight out of that, but also taking profit pretty quickly. Here we also pushed out. Again, we hold. So 33.50 is a pretty solid resistance area. Um, just keep that in mind where you're taking this trade out from. It's also had a in the last 4 hours already moved 200 something pips. So your risk factor for this particular trade for continuing out from here is just getting higher. So unless there's something else that's going to boost it to push it straight out, the risk factor on this trade is quite high. Anything that's moved 200 pips on gold or created that is your risk factor is high. So this is do I trade it? Do I sit out? Hey, your risk appetite is your risk appetite, not mine. Um, but is there a small trade in it? I'd be silly to say that it's not a silly trade to take a break out of this range. But what I do like about this current setup is that we've had bullish momentum, we've had price grab liquidity, so we've got a bottom wick now. So breaking past even this structure here to continue up, it's already grabbed momentum, right? So when I see, bottom wicks, it's essentially fulfilling any orders that were missed on this initial push here, right? So just comes down to how it plays. But yeah, um, as for rejection points, I would be putting that 3350 high priority as a rejection area. Cool. You guys got any questions? There's one in the chat. Would have worked well on NQ, NASDAQ. Yeah, it also does. It's something that we don't like. I haven't collected data off, but I know a lot of traders trade the orb on NAS as well. Um, but yeah. Well, here we go. Come back, grab that, come down. Let's get that break to the downside. See all that imbalance there. 1202. So we just had our hourly candle close indecision. 30. 30 was still bullish though. This could flip. This deep drop and then flip. Again, anything that flips on any of these candles leading up to after a solid bullish candle is all positive for bullish momentum, right? It's only when we start breaking these lows, okay, well, there's no more buyers now. Those sellers are there. But if this candle flips on the 15, if this candle flips on 30, pushes above that, cool. You've got bullish momentum. Let's see, let's see. We will look at BTC obviously while we are waiting. A solid bearish close yesterday. So remember I was saying yesterday, key areas, right? So we've obviously trend, price pushes bullish and maintains that area. So we're still technically within this top of this range at the moment. Nothing turns bearish until we start breaking structure, right? So we're breaking structure here at 112. We need to close down below that 112, and then essentially, price come back and reject off that area, right? So it's got that momentum right now, but market structure shift is usually going to happen after we close down below, reject an area, and then a following candle, right? So it can be where people tend to get caught out, right? But usually the ripple effect that happens with BTC and Ethereum and most coins is the ripple effect, right? So you'll get this if this is where the market's heading right now. We don't have any buyers or buyers pending here. You get price pushed down, and unless it recovers in the next candle straight back out from there, you kind of have that ongoing ripple effect of uncertainty of fear of, okay, this is out, I need to cash out. And if it creates a ripple effect, and that's where you kind of get these deep dives down. And then obviously you get the mindset shifts at some point, right? It's BTC in particular, I've been trading for many years and just observing the psychology around it is a lot of emotion goes into how people trade BTC. It's the ripple effect that happens when the market is dropping. People say, "Oh, the market's crashing." No, the market's moving a small percentage based on where it currently is, right? The market has to move $12,000 to move 10% now, right? Like it's got a lot of breathing room to even, move a whole lot to make a real dent, right? But if it does close below this area, then, you start to see what the psychology of what's happening in the market. And if it does close down below, unless it recovers within 24 to 48 hours back up into that range, that's when people start to have a change of heart. Because you'll see here, we dipped down into this area and then we recovered out from, we're down testing this area again. We could easily recover out from here back to 115, 116, price coming back down, recover out to 115, come back down again. If it does for the third time, then there's probability. Like every time we create these lower lows, it's just meaning that there's no more buyers at this point in time. We're looking at selling the market, right? So selling, and then we tend to have the follow through of psychology. So BTC is one to watch if you're holding. Um, right, watch its previous structures coming up and seeing how it reacts. But big sell-off, recovery, sell-off, recovery, sell-off, recovery, sell-off, recovery. It's really going to come down to what happens soon. We may get this short as well on gold. Ethereum, same thing. Bearish 4 hour. That's pretty solid drops. We've now broken this structure here. So this is on Ethereum. Oh, won't get too distracted watching this for this breakdown. But you can see here, we broke through that level. We held on Ethereum, we pushed out, and now we're below and retesting that level, right? So now, if that's our 4176 is our current resistance, because we broke through, now it's acting as resistance. It doesn't really have any other support until down here, right? We get down psychological level of 4,000. There's no more buyers at 4,000. That's going to dip. So close bearish here on the 4 hour. There's a trade opportunity to take that down to that psychological level. Candle flip on the hourly, big solid bearish, bullish recovery, candle flip down, first target 4072, and then further down from there. Come on, gold. 2 for the night would be great. Let's see how we go. See, the one thing I'll show you on the indicator is we're technically in this trade, right? So this is where I've, still got some adjustments to do in regards to where we should be putting it, but hey, here's what it is. Work in progress. I won't put it out till I'm happy with it. Um, but yeah, so it's more about, price coming down. It pretty much it pretty much wicked into that area. But this here is good on the 5 minute. We had a break, a recovery into, and this is where I was talking about stop losses, right? So a lot of traders that use the orb and they take a breakout from here, breakout trade, and having that 50% stop loss area, they would have been stopped out already. I just, statistically over time, um, the full range of the orb has always played better than in the middle, or if price breaks out and just below, it's yeah, it's always I just find that that stop loss keeps getting hit over and over, and I guess it is because of the way that the market or the way that a lot of traders are trading the orb.
Hey Jace, how are you? I just uh, didn't make it to the first half of the call, but I was wondering if you already explained your criteria for taking the candle flip, like last night.
Yeah. So I'll explain it on here on where were we?
If there's gonna be a recording, I'll watch it. But
Yeah,
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 that one.
I did explain the reasoning for a candle flip, which kind of was in line with what happened last night anyway. So this was the 11:30 candle here, right? So w- without, overthinking it too much, more about we had a change in structure already. So, I try not to involve too much other technical analysis when thinking about the orb, because then we kind of it then changes our judgment as to whether or not we should be taking a trade, not taking a trade. So, statistically, I just like to take trades on the breakout and look for previous structures as targets, right? I just found that after many months of testing, it's always seemed to be the thing that had worked the best. So here we had our opening range here, right? That was our opening range candle, and we got picked up here, and without me really considering, it's like, well, what has happened in getting in now at this point here? What has really been the consideration of taking this trade? Well, if I looked at it, 38 to previous structure 40, this is a 20 pip move here. I should have probably not have even taken that trade, because part of our rule is that we shouldn't be trading anything less than 20 pips, right? It's just there's not enough movement in it. The market, the candle itself, like obviously the range is here, but if you got previous structure at 20 pips, you shouldn't be taking it. But in saying that, we took it, I took it. The market moved and then it flipped against us. But the consideration for why I took the flip for this in particular reason, because every setup's going to be different, is market structure, right? We already had, price come up and then start to push out. The big change here was we had a shift in market structure here, right? So we went from higher high, higher low to lower low, and we pushed out lower high. We rejected here, and we created another lower high here to start to break down to the previous break down to previous structure, right? So probability was more so for me, I'm trading with the trend now. Right. So anytime I'm looking at taking a flip, it's always going to be on continuation of the market flip itself, right? Overall, looking at the bigger time frame, we had a shift. This was already a shift here because it no longer took out the previous high, right? So we had a market structure shift here, but the real change on the internally where we're looking at the market was it changed here, right? Lower low, lower high. and continue to push back down. So it was just a flip based, and so my flip criteria is always going to be if we're trending that way, right? If we've changed structure, we're trending that way. And looking at where I took the initial buy, we have a lot of noise here to the left, and previous structure was 20 pips, right? Shouldn't have taken that anyway. So
Thank you. Thank you for explaining again. And is there any reason why your entry was not aligned with the stop loss, but rather like 15 or 20 pips off? Is because you did manual entry
yeah,
or
manual entry. So I was watching my stop loss and I was just seeing if it was gonna take out, and then it kind of moved and broker spread kind of does that, right?
watch out for gold. Keep an eye on gold because it's all right, right. Yeah. Sorry
Um,
to interrupt.
yeah, it's okay.
Just
I mean, I'm sure
to make
everyone
sure we
that's
don't miss the move.
getting
Uh, but all right, that makes sense. Thank you very much for
in gold.
explaining again. Well, here we go.
Is it going to push down? So another thing for consideration of your spread and gold, especially if it's kind of like creeping like this, is your entry. If you measure out your spread here, so this roughly here, 40, I would say I can't see the other, so give it that the position itself, so would be now it's widening up. Um, if you're placing a sell stop, you try and incorporate what that would be, and then your sell stop is going to be below the range of that area, right? And not always going to be exact, not always going to be perfect. But if we start breaking the previous range, we've had decent criteria where prices come into this level, right? It's tested the range, it's recovered out from here, and now it's pushing down again. This is already a good sign of continuation down. Can it go against us? 100%. We know that. But we're looking for all signs of good momentum for price to continue down. And the other good thing that we are looking at here is obviously we have the imbalance as well, right? So we've got imbalance here and we've got imbalance here. So all good signs for price to push down. Consideration of partials on this revert on price coming down here is based on where this imbalance is, right? Because as we know, even though we've got imbalance here, it can touch the top, it can come right deep into it. So partials for consideration, if that's an option for you, maybe something to consider. But yeah, that area there, 338 to 332 is where we have that imbalance on the hourly. So if we continue down from here, it's gonna fight in between that area. $45. Candle flip at 45 is not, well, that is there. It's not really a flip at this point here or at the top of this range, and 50 is right there where I would expect price to reject. So Sure. 36. It's okay. You don't have to lie, but who is lying in bed on their phone trading right now, listening to this Zoom? It's okay.
I fell asleep. That's why I got here late, but I woke up.
Because you were already lying in bed.
Yes.
I see
I'm
usually
the opposite.
if I wasn't running a Zoom, that's how I trade US session. My wife is asleep. There's usually a movie on. I'm on my phone and I'm trading, but obviously I'm Zooming you guys, so a bit more
I
respect.
thought about doing it, but I actually got up.
Hey,
I thought about just doing the same thing, but I got up because
yeah,
my office is nowhere near their house. So I
yeah,
went, I'm in the office away from her so she can sleep. So,
yeah. No, that's fair.
but no, I definitely thought about laying in bed, doing it that way.
Uh, it's okay, guys. Bedroom traders is fine as long as we're profitable. It's your partner's not gonna get too angry.
Just out of curiosity,
Yeah.
when you're in bed, how do you trade if you use MetaTrader? Like you monitor that in TradingView and then magically switch to
So
MetaTrader, or how
So
do you
for
do
me, I use TradingView on my computer because obviously it's bigger. You can zoom in. You're not just looking at a small screen. As I've always for years, I just trade off my phone for the fact of being able to monitor it or be mobile with it. Right? It's only if I'm running bots or anything like that will I run it on a server and use my desktop for that. But yeah, it's ever since, right? It's do my analysis on TradingView, and then if I enter a trade, cool, I'll walk away. And just let it go. But yeah, MT4 or MT5 on the mobiles just easy. You can open and close positions. You can have multiple positions, close them all at once if you're on MT5. Um, so yeah, it's all pretty easy these
Yeah,
days.
cool. I haven't got used to MT5. I don't know why. Like I got used to TradingView and yeah.
So are you connected to your broker on here?
Yeah,
On
Black Bull.
No, I mean
Actually,
on
Black
trading.
Bull.
Yeah,
Yeah, yeah, in TradingView. Black Bull in TradingView. Yeah.
yeah, yeah. I've always just done it from my phone so I can take it with me. But yeah, MT5 really easy. Just have once you've got your trades in, it's yeah, very, very simple to use. So, guys, in 6 minutes, I'm going to jump off this call. Obviously, letting what happens happens. We had a win on US30, which is good. Pretty straightforward on that breakout today. Um, but yeah, that's pretty much it. Like the opening range candle it's not an exciting strategy. You you wait for it, do you place your orders and then you let it go. I mean, like the more boring trading is actually better, right? Why? Or why do I say that? I say that from a psychology standpoint is you don't want to get in the habit of getting super excited for a win or super, anxious or depressed over a loss, right? The more calm and monotone your trading is, actually better for your psychology because you don't let emotion get involved. And the great thing about the ARP strategy is once you're in a trade, it's stop loss, take profit, and there's nothing else to really do. It's not like traditional technical analysis or strategies where, you're monitoring it's really a statistical based strategy that is probably one of the best in sense of removing as much emotion as possible once you've made a decision, right? Because you shouldn't be touching it after that. The problem is with standard trades or standard, analysis. So like if I was trading this typically and I'm going, okay, I'm looking for price to recover to this area. What do you think my thought process is now if I'm going, I'm waiting for price to get to this area? Well, I'm now using fibs to determine if where price is most likely to retrace to, where is 50, where is 61.8. And then once price gets to this area, what am I waiting for? I'm waiting for, rejection, a bottom wick. I'm waiting for a bullish engulfing candle. And then if I don't get the bullish engulfing candle, I get multiple candles go sideways. I'll wait for another bullish candle here before I make a decision. You know, the thought process, the psychology that it takes to be calm and patient around something like this, that is what most traders trade, but they only lose money trading these kind of strategies because of their psychology, not because they're wrong, right? If price comes down to this area and they get all the indicators that they need in order to make the decision, the only reason why they 90% of the time they lose money is their head, right? It's like, nah, what if I'm wrong? Okay, I'm just gonna have a tight stop loss here. I don't want to lose too much money. Well, to not lose too much money is to not risk too much, right? But it's the thought process of goes, no, what if I'm wrong? Okay, I'm going to adjust it. Price gone up. Yep, I'm right. I'm going to adjust my stop loss here. Okay, price came back down. Oh, why did I do that? I should have left my stop loss here. And look at that. It went and hit my take profit anyway, right? It's the thoughts that run through your head that mess up your whole trading. I like the orb strategy for new traders, but also experienced traders because you're just working off data. Like, the spreadsheet that I showed you guys is just win, lose, win, lose, win, lose, doesn't matter. Win, 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 lose, lose, doesn't matter. What's the end result after a period of time? That's the only way you can measure a time-based strategy is because you know, you're using the same thing, you're doing it on repeat, it's over and over again, but you're removing all that emotion from it, right? So if you can remove emotion from trading, you're going to have a higher success rate, regardless what strategy you trade, but something that doesn't require too much thinking. It's simply, okay, identify your key rejection areas, identify the trend, and decide on where you're going to take profit and place your stop loss. Like there's not much else, there's not much else to that. So we shall see. Oh, quite a deep drop on US 30 here. Quite a significant drop, which is why gold is pushing up. But if we hold and we reject, we shall see. See, and it may be that this run is not done yet. So, like I said, even if it pushes up to 50, I know we've got this area here of imbalance, right? So, again, that's running deep. Even deeper again. Last 2 minutes.
Would you take the flip for gold in this case if it goes the other way because it's trending with
Only
the
for me,
trend?
no, only on the fact of 3350 being there, right?
Mm,
And we just
yeah.
look at previous sorry. If we just look at what's happened last time, and there might be enough momentum to push price through up and get that. But my only concern is what happened last time we hit 50. Um, so quite a significant hold at 50. So the next time we approach this area, we're going to have sellers expecting the same thing, right? So it will just come down to who who pushes up through that first. Um, I mean, yeah, like we're at the bottom, we're at the bottom of this imbalance here. Is there going to be enough to push it up? Again, that's the risk that you kind of go, do I try and take it up and hope that we're going to break through 33.50? Are we at the bottom of this run here, right? We're pushing down, we're pushed into that area. All the orders are getting matched now. We're in the deep of that imbalance. Price is pushing out from it here. See, I would have expected it to reject first and then start to push up another time. But hey, if after moving 200 pips in the last 4-hour candle, it's still got room to grow, then it's got room to grow. It's
Yeah,
just,
but still in the short time frame, it's still got some room, right? In the 15 and the 5.
yeah.
Because
So if we're looking at the 15, we're at 48 to 50. So, what's our rule on um,
mm,
taking a breakout to previous structure? It should be at least more than 20 pips, right?
yeah.
Um, so yeah, risk appetite comes down to you. That is a difference. Do you take the L and come back and trade another day when it's not pushing up against a strong level of resistance, or do you take the trade in hope that we break through this level? Could it break through this level to 57? Yeah, it could. Has price
Mm,
come down first and started to recover out from there? It has. Is it within the rules that you want to follow? It's up to you.
mm,
Um, so yeah, just and this is the thing, guys. I can't make every decision for you. I can show you how I'm trading things. I show you if I'm changing my mind last minute, because it's always going to come down to what the candles are doing prior to that move. Is it a silly move to try and force something? Well, comes down to data, right? You go like, what happened in this trade? Cool. I could have waited a little bit longer. I could have waited for a close before, 339.40. That's note taking. With this here, if I take the flip, did I force the flip, right? And did it
mm.
go in the direction that I wanted to? Did it not? Right? It doesn't matter. Like on um win or lose on gold right now. It's not about the winning or the losing. It's about, okay, what did I learn from this and how does that measure up against 30 days of data? Because in 30 days, you go, well, all the trades that I lost was because of this happening. I lost this trade because I didn't wait for a close. I lost this trade because I forced something just because of, we had price push into that area. You just got to make a decision. But that is time, guys. 12:33. I'm gonna hang out for 5 minutes after, and then wait for this video, and then have that ready to upload tomorrow. And yeah, we shall see what happens. Who knows? By the time I'm finished with this video, I might take the flip and be there with you, Fernando. Or I may not. It's just it comes down to you guys. But like I said, there is no, I know that we're taking 1 to 2 trades a day, and it does require patience, and sometimes you don't even get to take those trades. That's that's the market. That is the market. So you guys have a great night, a great evening, great afternoon, and I will see you guys.
Hey, Jace,
Yes, yes.
just
Thank you,
quickly,
Jess.
Don't talk
if
all night and then wait till I'm leaving. No,
yeah, I just thought of a question because you're going. Um, if you're if like at what point would you say you're not going to take the trade, like if it hasn't broken out either way for an hour or so?
if it hasn't broken out to the upside here.
If it hasn't broken out for say an hour or two, would you just not take it at all once, or would you still take the
It just
trade once it finally does break?
Yeah, it just comes down to, the momentum. If we're in a range and then we keep creeping up, right? So The breakout for me is always predetermined by what happened prior to the breakout, right? So as a breakout trader, I'm always looking to see what happened prior. So this here is already a good sign for bullish momentum, right? This here is good for liquidity grab. This here is continuation, right? But if it rejects again and does that and starts to creep, creep, creep and does all this, well, now you've given me more reason to believe that we're going to pop out from here, right? Because it kept failing to a point where it couldn't break through, but now market structure is shifting up. So every time price bumps against a level of resistance, it's just testing to see if there's more sellers than buyers, right? So is there sellers? Yeah, there's still sellers. Is there sellers? Yeah, there's still sellers. Until the point of everyone goes, no, we are shifting up. The value of gold is going up, and we need to either make a decision to go with the trend itself, right? Because the trend itself is not about what happens to the top part of it, it's what happens to the value purchase at the bottom. The buying power at the bottom is what's important here as well. It's not just the top, it's the buying power from everyone else that's coming into play. And you got to remember, we're talking trillions of dollars here. We're not talking about, you know, a million traders. We're talking about institutions potentially coming in here and going, yeah, we're buying, we're buying, we're buying, we're buying, and now we start to break out from there. Or are they trying to trap you and there's sellers, all the institutions are trying to sell, short their positions here and just trying to get you in so that they can then take you out, right? There's no perfect answer, which is why for me, I've found that, trading statistically is so much better than overthinking. It's either are you going to take the trade or you're not going to take the trade, record what happened and and that's all you can do, right? Like that helps remove emotion from the trading itself. And yeah, yeah, I think it's pretty self-explanatory in that regard, but I'm always looking if I'm going to take a breakout, regardless how long it takes. Like you said, do I do it if it's 2 hours later? Well, it's fine. It was still creeping up in 3 hours, then there's a reason for that, right? It's pushing for that momentum, but I don't think it's going to take that long because I know that we're looking, that's a flip candle now. So now that's grabbed liquidity and now we've flipped at 45. I think we'll get a push to 50 here, but will it be enough to push us out from there? We shall see. It is your call, your decision on whether you want to trade it or not. Yeah, wait and see. We wait and see. But you guys have a great night, and I'll see you tomorrow.
Cool. Thank you.
Thank you, Jace.
Peace.